Good afternoon, and thank you for joining us for the 2018 State of the Industry webinar. I'm Tim Henniger, Editor-in-Chief of Boating Industry Magazine, and I will be moderating today's panel. Today's webinar will be recorded and available at boatingindustry.com/webinars if you would like to see it again. Today, we are here to share some market intelligence and data with you, and we have three industry experts on the panel. Peter Houseworth of InfoLink, Rodolfo Rudy Tomarchio from Boats Group, and Noel Lais from Spader Business Management. Just a reminder, all attendees are in listen-only mode, but you can ask questions through the GoToMeeting module on your screen. After our panelists speak, we will answer your questions, but feel free to submit them anytime. This webinar is the companion piece to our annual market data book. If you are a subscriber to the magazine, it is included in your subscription. It is also available at the Digital Resources section of our website, and the direct address is on your screen. With that, I will hand the presentation over to Peter to get us started.
Thank you, Tim, and good afternoon, everyone. Before I get into the comments on the state of the industry, I did want to give a quick shout out to our fellow coastal dwellers up in North and South Carolina from down here in Miami. We've been where you are. It's not pleasant, we understand, and we're hoping the best for you, and that Florence will actually move through there, do what she's going to do, and get out as quickly as possible. You know, the faster they move, the less damage. So we're just know that we're thinking about you all. Hang on 1 second. This slide is not advancing. Okay. As for the state of the industry, I guess in a nutshell, it's kind of steady as she goes for the time being. But as these things go, we always try to keep a weather eye out, and we're seeing a few factors that do bear watching. So we want to bring those to your attention. Overall, it's good news. This is information through the end of June of 2018. In actuality, we put more new boats into service than any year prior, and that's the 8th year in a row that we've done so. That growth rate, so we put in 267,000 new units for the 12 months ended June of 2018. It gives us a growth rate of slightly in excess of 2%. Which actually seems to have moderated just a little bit from the pace that we were seeing a little bit earlier in the year. Outboards continue to dominate our industry and represent 85% of all traditional powerboats that are sold at the present time. In addition to the totals, outboard units have also moderated a little bit, and I'm going to talk a little bit in more detail about that in just a few seconds. In addition to that, we're still underlying looking for a bottom to the stern drive market. The unit volume has fallen under 11,000 units for the period ending June. And we expect that that's going to continue to be the case as we're seeing more and more traditional stern drive product and manufacturers who are predominantly manufacturing stern drive product are more and more frequently offering outboard models, or it's an option to their customers. Having a little trouble getting the slide to advance. There we go. So looking at this information geographically, basically this is, obviously a map of the U.S. The size of the circle tells you, okay, here's how big these markets are relative to new boat sales over the last 1 year period, and the color indicating growth in the case of green and red in the case of declines. Most states are up actually year over year, and even those that are red are in the low single digits. So it's not a material deterioration. The only notable exception to that has been Florida, which is obviously a big and important boating state, where unit sales for all boats declined by 7% over the prior year. We are watching a number of different factors. We've also understand that housing sales have also moderated, and typically those things kind of tend to go together. So we're going to keep an eye on that and see how it develops. A number of the segments that have driven growth for the last 8 years may be showing a little bit of maturity, and again, we're going to have to watch this. Obviously, the saltwater fish market is a big market, and it is too. While it's not entirely dependent on Florida, it is very dominant in Florida. Flats bay boats, which are basically saltwater fish boats 20 feet and less, actually declined by a little over 9% over the last year. Inshore is flat, while offshore continues to do relatively well. One of the things that we think may be playing into this and perhaps providing a little bit of headwind to what's actually happening is that we understand that supply of outboard engines has been tight, and while we don't think it's necessarily that those transactions are going to go away, it may have slowed the delivery rate a little bit. And I know that outboard engine companies are working hard to rectify the supply issues and ramp up outboard engines. So I think we're going to continue to watch this, but to the extent that we see it start to get a little stronger, I think that is a possibility. The other main segments that have really done well is basically the performance, which has been nothing short of spectacular over a very long period of time now. Even those are beginning to slow a little bit, 4% growth, but almost 56,000 units, which is pretty significant. The other thing to keep in mind is as these numbers, as the pontoon segment has grown and grown, moving these numbers gets harder and harder. It's just the law of the numbers. Towboats likewise have been doing pretty well, and it doesn't impact the overall market quite as much because it's a much smaller market. So while it's continuing to do relatively well, it doesn't look necessarily move the major needle all that much. One of the things that we look at, particularly when retail does start to look like it might be slowing a little bit, is something we call days inventory. And what that is a measure of the elapsed time between the production of a boat and the end retail sale to the customer. So this graph basically gives you the kind of the 30-day or 3-month moving average by the main segments of the industry. And as you can see there, there's a normal seasonal pattern that exists, but running through June, more or less, everything looks like the distribution chain is relatively healthy. And it also supports this, kind of notion that, perhaps with the outboard supply, perhaps being a little bit restricted, we are seeing a little bit of a creep up, but it's not significant, going from 100 and probably 90 days last year to about 204, 205. So that would not necessarily be inconsistent with that having an impact on the day's inventory as well. But by and large, the last time we went through one of these downturns, or when retail started falling off, these numbers just absolutely went to the moon. So we're going to continue to monitor those. And then lastly, this is something a little bit different. So now we're off of new boat sales. Now we're just looking at the boating population overall. So all of this is a representation of the distribution of boat owners, not just new boat buyers, but all boat owners as it existed in 2000, 2005, 10, and 15. So clearly you can see that the shift that has taken place to the right, and that boat owners as a group are getting obviously older. And even now, as we sit here in 2018, the 2020, which seemed like a long time off when we actually first did this, is now only 15 months away. So this trend is here and it's coming. If you look at back to the new boat side of this, most of the people who have been buying these new boats, are kind of on the right side of this equation in terms of being the 50 years or older plus. This segment of the boating population, to a large extent, has had the benefit from a number of different things, including rising real estate values for 8 years in a row, the stock market performance, so on and so forth. Many of these people are either still, are gainfully employed into their 60s, 70s, and even up to 80, where they, find they're doing what they want to do because they love to do it, but or they're retired and they're enjoying themselves and spending time on their boats. The people that are on the younger side of this, they're just getting out of the student debt thing. They are buying their first homes, but they haven't really been able to benefit from the rise in real estate. They're paying into the rise in real estate values, so there's still some some challenges relative to that. But I think that the thing to keep in mind here is that that slope of the line is getting more and more vertical, and we are going to be seeing larger numbers of people that are moving into their 80s, and certainly the incidence of new boat purchase among people that are 80 plus years old would be expected to go down. They've got what they want. They're God willing, they're still able to use it and enjoy it. But certainly as people get into their 80s, that becomes health becomes more of an issue, balance becomes more of an issue. So it's kind of a natural thing for people to begin to retire. Luckily, they're waiting till much later in life to do so, and we benefited from that. But it doesn't go on forever. So we just need to keep that in mind. Okay, that's it for me. Tim, back to you.
Thanks, Peter. Now we'll hear from Rudy.
Thanks, Tim. Let me see if I have control shortly. Yes. Just trying to get the slides over. I know there's a little bit of a delay in getting these over. Just let's see. There we go. All right, so I'm going to be running through two topics today. First, some consumer trends we're noticing on Boat Trader, and secondly, Yacht World brokerage sales. So you may have read in Boating Industry earlier this year about our study that we did with InfoLink and Peter Houseworth, who you just heard from. It was released this spring, and it showed that 1 out of every 5 leads submitted on Boat Trader converted into the sale of a boat. So what are consumers doing before that purchase takes place? Well, last year, 60% of people looking at Boat Trader listings were doing so from a mobile device. This year, nearly 70% of our visitors are using a mobile device. In the data book, it'll show you everything through May, and then in this presentation, we have through just last month. So the number actually rose significantly between when we first published this in the data book and now. Given these trends, what we did is we recently soft launched a Boat Trader consumer app for both iPhone and Android. It's seen a positive reception organically, and we believe that mobile traffic is going to continue to take a larger share of listing views and overall activity as we implement more of the app's features and begin to promote it. And as we build products that create a best-in-class experience for consumers, we're also taking a mobile-first approach, and you're likely going to see that same kind of trend happen throughout the marketplace. So growing engagement is yielding boat sales, and let's take a look at the brokerage market through the eyes of Yacht World's sold boats database. These are from January to May as we provided in the data book, and while 2018, which is in the green, the green bar, appears to be down by only a few hundred boats or so, the number of days on the market is also down. So this reinforces the anecdotal feedback that I'm sure many of you have heard from dealers and brokers that it's hard to find enough inventory to meet the demand. So let's take a deeper dive into each segment. We'll see how it tells a similar story. Just trying to get was working for just a moment ago. There we go. So looking at powerboats alone, there was a 7% decrease in sales overall, and the decrease in total value matches that at about 7%. While the average value per boat is up from 2017, the increase is only a couple of $100s per boat, which is why the total value is, still down. In sale, boats sold are down, but the value is up 2%. The average price is up nearly $5,000 per boat from last year, which is why the total value of boats sold is actually higher. We're also seeing the time to sell for sailboats increase, which only happens in one other category. When we look by length group, you'll see that one other category where the average days to sale is actually higher than last year's with boats under 26 feet in length. This could be attributed to the average price per boat being higher, and even though less boats were being sold or are being sold so far. So as you can see, there was a 7% decrease in sales, but there was still a 2% increase in overall value. These next three length groups are all going to share kind of a similar story. Less boats were reported as sold with a decrease in overall value, but each of these segments are taking less time to sell. In this case, with boats 26 feet to 35 feet in length, the average price per boat is higher since it was only a 1% decline in value, even though the volume sold was down 7%. The same story can be seen for boats 36 feet to 45 feet. And I promise these are all different graphs, but again, a very similar story with boats 46 feet to 55 feet. Now, a story here really begins to emerge when you look at this particular length group. This is boats 56 feet to 79 feet in length. This was the only grouping that, according to sold boats data, saw growth from 2017. The 23% decline in days to sale year over year also indicate a much higher demand for boats in this length group. Now, the reason for this can likely be found in yacht closer data. So by digging a little deeper, you could see that in 2017, 55% of the boats sold were 11 years age or older, and in 2018, it's down slightly to 49%. But this number of boats that are 11 years or older being sold in the market is likely due to the recession that happened all the way back in 2008. Yes, 10 years later, it's still having an effect on the market, where before the decline happened in 2008, there was significantly more new boats being brought into the market. But between 2008 and 2012, production was reduced significantly to deal with the crisis. The bigger boats hold their value better over time than the smaller ones. So I just showed you enough bar graphs in the last couple of minutes to probably make you want to head straight to the nearest bar after this call is over with, but there's a few main points I wanted to pack up for you all to take away. One, mobile usage will continue to drive consumer behavior. The saying that content is king is true, but the majority of people are consuming their content on their mobile devices now, which makes mobile the real king of kings to say. Speaking of which, Apple just had a new announcement this afternoon to unveil its newest iPhones. So it just shows you that these are large events that are happening and that mobile really is, the way to go to reach your consumers. Number two, time to sell is going to continue to decrease. That's an overall consumer trend, and as consumers have access to more information online, the online shopping experience is getting even more convenient. It's only going to get faster. Three, overall inventory is low and cannot keep up with demand in the brokerage market, which is why boat sales overall year over year are down. But number four, lower inventory is likely the result of fewer boats being built in response to the 2008 recession. This would show why larger boats in the 56 feet to 79 feet category are selling well and holding their value, whereas shorter length groups are in a slight decline. And with that, I'll give it back to Tim.
Rudy, thank you. Next, we will hear from Noel.
Thank you, Tim, and thank you, boating industry, for this opportunity once again to participate in the market data book and to be a part of this panel. So I want to start with the good news. So the data that I have to share with you today is data from the dealers. This is the numbers from what our dealers are reporting to us. Dealers who participate in our 20 groups or in our multi-location reporting, or just dealers who submit numbers for our trends reporting. So this is dealership data. And my first slide is the net profit percent of sales, which is really, that's the end result from the dealership standpoint that we all hope for, that our dealerships are profitable. And looking at this slide, you can see that 2017 was the most profitable, 5% net profit as a percentage of sales, most profitable in the last 10 years that we've been tracking that. We've seen a steady growth since 2013, 2014, that was relatively flat, but then a growth in 2015 and 16, and then followed in 17. And those of you that are familiar with the Spader reporting, you know that we use red, yellow, green to indicate where their net profit is as far as if they're high performing or in the middle of the road or lower performing. And so we look at the same slide and we put our red, yellow, green flagging on it. You notice that so the red indicates net profit. In this case, net profit that would be below what Spader calls survival net profit. The yellow indicates an area of profitability in the neighborhood of 3 to 3.25%, which is we call survival net. That's the minimum net profit that we believe a dealership needs to earn in order to stay in business over the long term and be an ongoing concern. And then the green, when you get to 4% or above, that's the area where dealers are thriving. They're above their survival net. And so you can see 2015, 16, and 17, each of those 3 years, we've been in that green area, which is very positive indicator for dealers and also the boating business. I wanted to go back a second to one of my slides from last year and compare a couple things. So this is a slide from new boat sales in 2016, and you'll notice that there's been a steady growth since back in the low of 2010. And last year, if you were on the webinar, you noticed that I compared this to the change in inventory. And so in 2016, we had a 4.7% growth in new boat sales, and our new boat inventory actually declined to a little over 3.4 million. This is the inventory that dealers had on their lot at the end of the year. There was an 8.7% decline in that inventory. So sales are up, new boat sales are up, new boat inventory was down at the end of 2016. If we look at the same two graphs in 2017, we've already seen that the 2017 boat sales have increased, to a little over 7.9 million, or representing a 17.1% growth from 2016 to 2017. But inventories also increased a little over 15%, 15.3%, in which, you know, you would expect. We couldn't continue to have a growth in sales without a corresponding growth in inventory. So you would expect to see that, but you know, as Peter said, steady as she goes. But there's some things that we want to keep an eye out on. So one of the things that I'm recommending to our dealers is to keep an eye out on their new boat inventory, to see where that's going. If our sales growth has increased over our inventory growth, that's a positive thing. And of course, that would mean that our turnover on this next slide, when we look at inventory turnover, our turnover from 2016 to 2017 has increased. But just be cautiously watching for your levels of new boat inventory. The new boat gross margins has been it's been flat to down for the last several years. In 2017, we saw a slight uptick in the margins on new boats, which is a positive thing. There's been a lot of downward pressure on margins, as was mentioned earlier in our presentation. There's a lot of shopping going on online and away from the actual dealership lot, and there's a lot of availability of invoice and cost and things like that that's had downward pressure on margins. So it was good to see a little bit of an uptick in margin from 2016 to 2017. Still one of the the lowest margins in the last several years, and I think probably a trend that we're going to see for the future is margins are going to be more difficult on new units, are going to be more difficult, and thus causing dealers to find other areas in their dealership to earn those margins. Used boat sales saw a nice increase from 2016 to 2017. After a slight drop in 2016, they bounced back, and so in 2017, used boat sales, the dealers that reported to Spader were the highest ever in the last 10 years. If we look at the other side of how dealers are spending their money, the biggest expense ratio that dealers have in their operations is on people. We measure that in terms of their personnel expense ratio. And in 2017, we can see that the personnel expense ratio dropped to 44.6%. When we overlay our green, yellow, and red, you can see that for the last several years, 10 years plus, the average dealer's been operating in that red area above the 45% personnel expense ratio that Spader believes will move them out of the survival net until 2017. So the average dealer finally got back into the yellow area, or the survival net area. And because this is one of the biggest expenses that you have in your dealership, I always like to do a little sanity check, and so I look at where the most profitable dealers, the dealers that had net profits in the top 20%, what their personnel expense ratio was. And so if I overlay that, we can see that The most profitable dealers were, a full 5 points. They spent 5 points less on their people costs than the average dealer did. And again, because this is the single largest expense, a big reason why those dealers are in the most profitable category. We continue to look at our other expense ratios. Our advertising expense has been on the increase slightly, but an upward tick in the last 2 years since the 3.9, and that ratio where it's at today, 4.2% would be in what we call that yellow range, or that survival net profit range. Floor plan interest, we've seen continue to see historical lows in interest rates, although there's a little bit of upward pressure. But we're seeing that we're enjoying a 4-year or 3-year decline, slight decline in floor plan interest, and it's well down in the green zone, which would be the thriving zone. So this is a big contributor to the fact that remember we looked at the net profit earlier, and the net profit for the last few years has been up in the green zone. A big contributor to that is that low floor plan interest rates that we're enjoying right now. Those because the dealers are having to spend less on floor plan interest, those dollars are dropping down to their bottom line. So, and we need to be alert to we won't always enjoy these low floor plan interest rates, and so we need to be watching for that. And then our next expense ratio is our other variable expenses, slight uptick in that this year, and those that 14.1% puts us into the survival net, or the yellow category. Finally, the last expense ratio we're looking at as our fixed expense ratio, and we've seen that's declining over the years. Much of that is a function of the growing sales. As our sales volume grows, our fixed expenses as a percentage of our gross margin are begin to decline. We can do more sales with similar fixed expenses, and so our fixed expenses were flat from 2016 to 2017. They're just up slightly into the yellow, or the survival net category. So when we put those all together, we see that personnel and advertising and semi-fixed and fixed are in the yellow area, but the floor plan interest being down in the green area, all that added together results in a strong net profit, one of the strongest net profits that we've seen in several years, and we hope that will continue. When the market data book came out, the most recent numbers we had at that time were May, and I thought it would be good to just take a look at. We have some more recent numbers now, so now at this point in time, the July numbers are in. Very soon we'll have the August numbers in, but we have July numbers now. So there's a couple slides that I wanted to touch on, comparing where we were at in May to where we are now at the end of July. So first of all, new boat sales. So the blue bar represents new boat sales May of 2017 year to date, and you can see in May of 2018, the green bar, our new boat sales were up. So we had done better through May of this year than we did last year. When we look at new boat sales in July, 2 months later, we see the trend continues. Our sales in July of 2018 outpaced the sales of July 2017. when I look at net profit, as I mentioned, the thing that we really all work for in May of 2018, the average dealer had earned more than they did in May of 2017. But when I looked at July of 2018, you see it's shifted a little bit. Through July of 2017, the average dealer had earned more than they did in July of 2018. Not a big difference, but certainly something to keep an eye on. So we have more sales, but less profit. And that could be a couple of things. Margins, which we saw in the new area, were up a little bit. And so that leads me to believe that it's in the area of spending, that we were spending more dollars. And so then I looked at just a couple of other areas. Our parts and accessory sales in May of 2018 were running ahead of last year. And when I looked at July, I see parts and accessories had fallen behind slightly where they were July of a year ago. And then lastly, service was running ahead of 2017 back in May. And when we look at service at the end of July, we see that has fallen behind slightly. So a couple of things, like again, as Peter said, steady as she goes, but keep an eye out. I'm going to be watching what happens to service and parts sales through the rest of the year, what happens to the net profit, what happens to inventory levels for our dealers as we move through the rest of 2018. Back to you, Tim.
Thank you, Noel, and thank you again to all of our panelists. It's fantastic data. I mean, we always love doing the market data book. What I'd like to do now is to take your questions, and we'll get to that. We're going to get to that right now. First off, if you have a question for our panel, please submit your question through the Go to Meeting module and direct your question to one of our speakers. We always want to have questions after we're wrapping up. We have a couple of questions related to slides. Yes, they'll be available. It's part of the webinar. But what I'd like to do is make sure we'll get all of our panelists ready to go here in terms of being activated again, and we can get them going in terms of being able to answer a question. And just as a reminder, the webinar is going to be archived at boatingindustry.com/, and we're going to work to have that archive up by tomorrow and get it ready for everybody. And what I'd like to do is we'll get into our first question. This first question is for Spader. Does your data cover the entire continental U.S.? Is that data focused on a certain region?
Thank you, Tim. So the data that I shared with you all today is from the U.S. and Canada, the entire North American continent, all dealers from those areas. We do, wherever we have sufficient data to break things out by region, we are able to do that. But the data that you saw today is U.S. and Canada.
Okay, very good. I'll get things rolling with a question for Peter. Peter, the market share for fiberglass outboards continued to remain relatively stable over the last year. Please address this trend and any key indicators for select brands that might be of concern in your mind.
Well, I think there's a couple of things. We don't generally comment on individual brand performance. It's kind of like the stock market. The stock market can be up or down, and any individual stock can be doing better or worse, in certain environments. So we don't generally comment on the specifics. I mean, I don't have it in front of me anyway, but in terms of individual fiberglass outboards, I would mention though that as we did touch earlier on, there is a trend for more outboard models, particularly among companies that historically had very few. They've increased the emphasis, or if they weren't offering them at all, they're now very much front and center. And that's a trend that we think will continue to play out. It just seems that there are a number of advantages from the consumer standpoint that favor the outboard propulsion category, and we think that's going to continue.
Peter, here's a follow-up question for you from one of our webinar viewers, listeners. Infolink showed saltwater fishing, pontoon, and tow is strong segments. Can you address any of the other segment results? I mean, those are critical. You've touched on them. There's growth. Are there any other things you want to talk about?
Well, we've been, basically for the last, 8 years, these are the segments that have come back, that have shown that some more resilience. One of the things that we have noted before is, there has been this continued weakness in the small runabout and cruiser market. We do a lot of work relative to monitoring first-time boat ownership, and that's where most of these people would show up, is in these smaller runabouts and cruisers where they don't necessarily have a specific activity in mind, be it fishing or tow sports or whatever, and that segment has continued to just kind of languish, I guess, for lack of a better word, while the others that we highlighted in our presentation have really been doing well and kind of lifting the industry out of it. And it's still the other smaller cruisers and runabouts are still kind of just lackluster, I guess, in terms of the growth dynamics. So it's a little bit of a concern to see that that some of these are, and it's to be expected. I mean, there's not an inexhaustible supply of people who want to buy new boats. They tend to be about 7 out of 10 new boat purchases are purchased by people who already owned a boat. But there's not an unlimited supply, and we know that this population is aging and starting to age more rapidly. So I think that would be my comment in that regard.
Excellent segue to our next question. And what I'd like to do is have Rudy and then Noel and then Peter. We'll come back to you. Here's the question. Is the trend showing the aging of the boat buyer irreversible?
I wouldn't say that it's notably irreversible. I think it's something where if you're looking at the way time to purchase is going down, and also at the increase in mobile traffic as the shopping experience is changing, I think what we're seeing is that there's more of an accessibility to a younger buyer. It's just that the economy essentially would have to be in line with what's going on. But I think from an e-commerce standpoint and from a marketplace standpoint, I think that trend is. I wouldn't say it's irreversible.
All right, Noel, go ahead.
Well, and I would just, I don't know if I'm qualified to answer whether or not that it's reversible or not, but what I will tell you that we see in our dealerships, and we talked about, the buying experience, and you saw the numbers on the mobile shopping, mobile applications. What we are seeing is that some dealers, typically the more successful dealers, are adopting and adapting to the new buying practices that are out there of the younger people. And one of the comments that was made recently in one of our meetings is that we have many entrepreneurs or many ownerships of dealerships are, if they haven't gone through succession, they're in the 60 to 65 year old. And so the comment was made is, do we have 60-year-old marine dealer owners that are still trying to market in their 60-year-old way to the new 30 and 35-year-old buyers. And if they haven't adapted, we're seeing that is not working.
All right, our next question. Is there any data that shows the effect of Hurricane Irma on a 7% decline in Florida sales on the country map? Peter, why don't you start?
Yeah, we've looked at this on a number of occasions for a number of different storms. We've been asked this question before, and typically, no, there's not a definitive cause and effect relationship between a hurricane and boats, new boat sales specifically. I think the perception tends to be that when a hurricane goes through, that everything is complete annihilation, and probably Boat US and/or Geico would have more information specifically about this. But the perception is what you see on TV, and there's 4 or 5 boats that are piled up on the shore, and that's what your visibility is of, okay, this is what happened to all of the boats that are in that area, when in fact there's a lot more damage, just physical damage that needs to be repaired, than there is complete destruction. So it's not, there's not as much, it's not like, there are no boats left after a hurricane goes through at all. So I don't think, every time that we've looked at it, we haven't been able to get a correlation of cause and effect. A storm looking out a year, recognizing that the people who do recover and collect their insurance proceeds and would then make a decision. It could happen a year later. It could happen 2 while they're fixing their home, and then the boat comes next, and then so on and so forth. But so far we haven't been able to come up with a definitive cause and effect relative to storm and boat sales.
Rudy.
Same topic?
Same topic.
Yeah, so I mean, from a brokerage perspective with yacht sales, I mean, what we saw and what I ran through the reporting was that initially, when you're within that same month, so Hurricane Irma made landfall about a year ago on Monday, and for that initial month, it seemed like that boat sales in Florida would drastically decline, but towards the end of the month, it actually rebounded pretty strongly, and it ended up, I believe, in September 2017, I believe they actually ended up selling more boats than in September 2016. So what we saw from a market perspective, at least when it came to number of listings, is that it dropped off for the first couple of weeks after surveying damage, but through the surveying and through retrialing the boats and making sure that everything was functioning, I think what we actually saw was that a price increase would happen in the interim, that the boats that were that essentially fared the storm best were back on the market pretty quickly and more favorable to sell.
Noel, same topic.
Well, I think I would answer from the perspective of the seasonal trends. We use seasonal trends for our clients to forward forecast, where they're heading, and we do watch for spikes or declines, changes in seasonal trends over the years. Typically, a 3-year average of seasonal trends is a good predictor. And I would have to say that overall, we haven't noticed significant changes in the seasonal trends. When we average everything together, an individual dealership who's monitoring their own seasonal trends might notice something, a slight change, but we have not noticed a change in seasonal trends due to hurricanes.
Right. We have a question regarding industry consolidation, and of course, we're seeing activity on merger and acquisition. Almost monthly. It's very, very, very busy. Let's run through and maybe get each panelist's take on industry consolidation. At the current time, maybe if you want to go forward, you don't have to. But Peter, why don't you address this topic, because I know a lot of people are wondering about consolidation and merger and acquisition right now.
Yeah. Yeah, I mean, it is something that is to be expected. We still operate in a very fragmented industry. We track 950 current manufacturers of boats. That is, of a certain size. Well, everybody's got to eat. So there are a lot of companies that that are relatively small to mid-size, and relatively few that are large. So I can see where there are opportunities, and certainly those with scale, like a Winnebago or a Polaris, who can come in and basically use their expertise, engineering and technology and everything else to kind of dominate a specific segment. So it's not surprising to us at all. In fact, I guess probably the only surprising thing would be that it took this long. Nor do we think it's over. And I think we're seeing that. Also, we've gone through the cycles of take it apart and put it back together. Now we're seeing some of the manufacturers, and particularly in the towboat area, where they're branching out into other segments, realizing that they've got a niche of the market that fine, it's a good healthy niche, and that's great. But they're expanding into other markets, into totally different activity segments. And that's what we are basically tracking these days, is not necessarily so much, do you call it this or do you call it that? It's kind of, what are these boats being used to do? So we kind of look at we try to look at it from a consumer's perspective, and how are they using the boat? So yeah, we definitely expect this to continue.
Rudy, same question.
I'll echo Peter's sentiments for the most part when it comes to that. It's surprising it took this long, and that I guess to elaborate a little bit more when it comes to the crossover portion, what we've been kind of monitoring here, and what we're interested in seeing what happens next with some of these acquisitions, is that seeing some of these other brands that used to be a little bit more active in some of the boating markets, to see if these acquisitions actually help them either get back into the market with a particular brand, or if they're going to start leveraging the technology and some of the manufacturing prowess of some of these brands that they have to expand again. Like, for example, with the Winnebago Polaris piece, to see if Polaris actually comes back out into the personal watercraft market is something interesting. I think we'll see whether that happens or not. And at the same time too, we've seen a few brands already start expanding their boat manufacturing, essentially their scale of what they produce, and how they're expanding into other boat classes and boat segments. So with Hinckley's announcement at the Palm Beach Boat Show, and how they're going into doing outboards now, and seeing Chris Craft also expand in their way that they've done. I mean, I think it's only going to continue from here.
Noel, same question.
Yeah, I would agree with both of the other panelists. We see consolidation only getting bigger. Those of you who are familiar with Spader, you know that we work in several other industries, and so the farm equipment industry is in an industry that has they're going through like the third consolidation, where we started out as single stores consolidating into multiple stores, and now multiple store locations are consolidating with other multiple store. So it's been going on in other industries for quite some time, and it's not surprising at all to see it happen in the marine industry, particularly when business is relatively good. The challenge that we see that creates for dealers are they have a decision to make. It's getting more and more difficult for smaller dealers, or for single line dealers to stay profitable and to compete with larger multiple location dealers. Typically, there can be better buys from OEMs, and just the economies of scale that they have. And so I think that's something, the smaller single location dealer, if I were in their shoes, is something that I'd really be, on the lookout for is, what is my future, and particularly if it's a poorly run, low profit or no profit dealership, even if they want to sell, that can be difficult. So really need to get your your business strong and stable and profitable. Smaller dealers, the smaller dealers that we've seen being able to effectively compete are those dealers who create sort of a niche market where their dealership is the place. They've got good customer relations, and their dealership is the place where customers want to come. Those types of dealers have been able to compete up to this time pretty successfully, but we see that consolidation is it's going to continue and only grow over the next several years.
All right, our last question is going to be propulsion related. It deals with stern drives. What year are we in terms of stern drive decline? Some people are saying it's 10, 15. Has it been longer? Can each of you basically touch on that segment? And that's the question that we're going to wrap up our webinar with today. Go ahead,
yeah,
Peter.
I can start on that one. It's been well over 15 years. That segment of the market has, it went through its heyday. Outboard, came in a little bit afterwards, but it's been a constant decline, and the 2008 kind of collapse, if you will, really exacerbated it, and it just never looked back from there. So it was in decline already, and it's never recovered, and nor do we think it will. It will continue to, it'll continue to exist, and obviously there are a lot of stern drive boats out there. I mean, that's the other thing that we really haven't been talking about much on the state of the industry. But these are very long lived assets. These boats are all going to be around for a long period of time, and they will continue to need parts, and they will continue to need service, and they will continue to exist. However, it's been going on for so long that certainly the underlying dynamics now are starting to get affected in that the market for those boats, because the stern drive boats do tend to be older on average, and that they are scrapping out. I mean, at some point, okay, it's just not worth putting another dollar into that into that particular engine, and because the engine cost relative to the value of the boat, those dynamics change over time. Where it's just a lose-lose proposition, and those will just become no longer economically viable. So while there still are a lot of them out there, the dynamic has changed. There's there's very little inputs coming into the market, and they're dying at a faster rate.
All right, Rudy, go ahead.
Without echoing Peter too much, I guess the one other thing that I can add to the stern drive conversation is that what you're also seeing is that there's been a few different, technological advances in propulsion. So what you're seeing is that there's more options available, and then with outboard power also kind of expanding, what you're seeing is that even larger boats now are being propelled by outboards. I mean, we're looking at now a couple of new models from manufacturers between 60 and 70 feet that are going to be propelled by outboard motors, which is insane to think about it.
All right, and to end, Noel.
Yeah, we don't follow that particular part of it as much as someone like Peter does, and so I would certainly say with the dealerships that what he said is what we're seeing happen. I think for us, from the dealership perspective, it first began to be significantly noticed back in 2008 with the downturn, and we had some dealers who said that they were going to, the stern drive market is going to come back, and and they didn't diversify. They kind of hung on, and it was going to come back next year, and it didn't, and can come back the next year, and it didn't, and those dealers now, 10 years later, have at some point in time, came to the conclusion that, hey, it is not going to come back, and they did need to diversify. So I think I would wholeheartedly agree with what Peter and Rudy said.
Yeah, actually, if I can just interject, I mean, people, generally speaking, don't understand that we're tracking all of that. We're always being asked to talk about new boat sales, but we as a company have been since 2000 tracking every registered boat in the country and looking at these changes and trends and behaviors and patterns and what consumers are doing and what's buying and what's selling and how big is the pontoon boat market and so on and so forth. So there's actually a lot of information out there that is available to the industry to the extent that people want it.
And with that, we're out of time. I want to thank our panelists again for participating in today's discussion, and I hope all of you listening found it as educational as I did. I know we have some questions still in the queue that we weren't able to address. We'll try to get some of those questions answered offline. And if we can, we'll post those responses with the webinar archive. Again, thank you for listening today. This is Tim Henniger at Boating Industry. On behalf of our panelists, I want to thank you again for joining us. Have a great day.